Morning, Steve here in Chicago with the morning grain comments. Overnight, there continues to be a slide in prices led by the stock market as the number of cases worldwide of the coronavirus continues to increase and the number of deaths. Also in the United States and California, there's a new case in which the medical people don't know how this person got the virus. So there was talk yesterday that it may be mutating, and they can't explain why it kind of jumps up into clusters and where it comes from. So this kind of adds to some of the anxiety. For the U.S. stock market, this could be the worst weekly loss since the financial crisis in 2008. And so you see people taking money out of those areas and trying to go to the sideline until this thing is contained. We do note that there was a talk about China. 43% of its manufacturing companies is back online. That's up 10% from last week, but this is much slower than people had expected, which raises concern about their economic conditions and the growth there, which has a rippling effect globally on the world economy. Yesterday, we found that U.S. renewable fuel prices rose about 25% on a report that the administration has decided to pair exemptions for oil refineries and the national biofuel blending laws. This and a little bit of bottom picking in palm oil yesterday and overnight has soybean oil futures up while the rest of the grain futures are lower. We're still concerned about China buying based on the Phase 1 trade deal. March 2nd is when they can officially start lowering tariffs and allow to buy U.S. ag goods. Again, the market is hoping, at least from a pork standpoint, maybe a beef standpoint, and maybe dairy products and maybe some other issues like wheat, they can come in and buy. The congestion at the ports is beginning to decline, which is a good sign that things there are trying to get back to normal. We expect wheat export sales to be 400,000 to 600,000 tons, corn 800 to 1 million, and beans 600,000 to 900,000 tons. And we're starting to ask some of the consultants out there as to the impact that the virus might have on global food and feed demand, and the impact that might have on trade. And so we'll see if that kind of slows things down. We've noticed that open interest since the high in February for beans has dropped about 88,000 contracts. For oil recently, 20,000 contracts. For meal, 28,000 contracts. For corn, 100,000 contracts. And for wheat, 72,000 contracts. Some of that could be due to the slowdown in demand. Others could be, especially in wheat and soybean oil, long liquidation on concern that there could be a slowdown in global demand. We expect zero corn and wheat deliveries. We could see just a slight, maybe 250 to 400 meal and soybean deliveries, and expect a lot of soybean oil deliveries, maybe 1,000 to 1,500. Funds, we've got them long 28 wheat, short 116 corn, short almost 100 beans, short 70 meal, and long about 23 soybean oil. Again, South American weather, Brazil looks good. Argentina, though, is dry, and we're going to have to kind of watch Argentina over the next 30 days to see if this dry pattern continues and impacts their production. We did note yesterday that Argentina suspended their export registrations. They're expected to raise their export tax on beans from 30 to 33% to try to help pay for some of their financial problems. This was not unexpected, and it's not expected to offer support to beans and meal despite yesterday's quick rally when the news was announced. So again, things are lower, and we expect them to continue to trend lower until we get some positive news on this coronavirus or see some kind of pickup in demand. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.